We are off to the races here at the New York Stock Exchange, and as the market opens on what is the final trading day of the month of September and the third quarter, I am joined by an expert all things equity markets, Christine Short. She's the head of research at Wall Street Horizon. Christine, it's great to talk to you, especially today. Not only are we wrapping up the third quarter, but we also have a busy week on tap. What's on your radar?
There's a lot, as usual, but there's a lot going on this week. I'm checking in on the first kind of beginning trickle of Q3 earnings. We've got Nike, McCormick, ConAgra, a few other names coming in. Of course, towards the end of the week, we've got the jobs number for September that's going to be out. Also, keeping a check on oil prices. We had those Israeli airstrikes in Lebanon over the weekend that killed Hezbollah leader Nasrallah. That hasn't seemed to impact oil prices. Last I checked, Brent and WTI were only up about 1%. But, the war there, political tensions, yes, could, impact oil supply. So always keep an eye on that. And then most immediately are these potential dock worker strikes that are set to begin at midnight tonight. Contracts are due by tomorrow, October 1st. As far as I know, talks are at an impasse, so there's been no progress there, but the repercussions would be huge on supply chain, shipping delays, prices. We've just wrangled inflation, and that would lead to prices going up. JP Morgan says it could cost the U.S. economy $5 billion every day that it lasts. That's 6% of U.S. GDP. So going to keep an eye on if any progress is made today, because that could obviously have huge ramifications, especially ahead of the holiday shopping season.
I know, and I think, the more that we cover these holiday shopping trends, October 1st, tomorrow, seems to be almost the unofficial start to the holiday season. And so I think it's good to point out just the timing of all of this. In terms of retailers that this could impact, what are some of the ones that might see a hit?
Walmart, IKEA, you look at the list, it's Home Depot, Amazon, LG, so all your electronics, the big things people save up for Black Friday, Dollar General, so even some of the dollar names and the discount names certainly going to be impacted, but those are the direct hits. It would trickle into, any of these retailers. And again, the holiday shopping season makes up 20% of U.S. annual retail sales, so it's a huge chunk of the shopping that us consumers do for the year. And so it would mean shipping delays on things. It would mean, it could even impact hiring at some point, because retailers aren't going to do their usual seasonal hiring if there's supply chain issues and they're having trouble keeping the shelves stocked. So it would trickle into pretty much every facet of the economy.
Let's talk about the jobs report. That's on Friday. And of course, jobs is so important to the Fed these days when it comes to determining its path forward for interest rates. What are your expectations?
Yeah, so I think the current estimates are for about non-farm payrolls to rise 140,000. That's in line. We saw for August about 142,000. But I'm being mindful that the last couple of readings have come in a little bit light, which obviously the markets haven't liked. We did get a positive note last month. We saw unemployment tick down just a little bit. And then if you look at the recent initial claims, those have actually been dropping. So I think leading to the report, it's positive to see that. We've, of course, just gotten that jumbo 50 basis point cut from the Fed a couple weeks ago that shows they support the labor market. They are trying not to see this thing cool any further. But again, the reason it is so important, and we go back to the consumer, is that the consumer, the highest correlation with how they spend money is how they feel about their jobs. And so if they see the labor market softening anymore, if they're worried about the possibility of them having a job in the next 3 to 6 months, they're not going to be as willing to spend.
Christine, in terms of companies reporting earnings, can you list a few that will be on tap here?
Yeah, so this week, like I said, it starts very light. We've got Nike and a few of the consumer staple names, Constellation Brands, McCormick, ConAgra. Next week is when things really kick off. October 11th, next Friday, we get all 3 of the big banks, JP Morgan, we got Citigroup, Wells Fargo. The week after, we get the rest of the investment banks and more of the financials. So that's really the kickoff. They are sort of the bellwether for the season and how it's going to go. Right now, the expectation is for Q3 growth just shy of 5%, both on the top and the bottom line. What's interesting, though, is analysts have really been ratcheting estimates down. They've dropped them about 4 percentage points since July. The reason I think this is good, and it's a catalyst for a good third quarter earnings season, is that we know investors really react positively when companies have big beats. And so by pulling estimates down, we all know the game, right? Raises a likelihood that companies are going to put in big beats. Investors are going to react to those.
All right, Christine Short, head of research at Wall Street Horizon. Christine, thank you so much for joining us at the Market Open.